BlackRock CEO Larry Fink is proposing a tweak to the traditional 60-40 portfolio strategy. Yahoo Finance's Kerry Hannon is here now with more on Fink's proposed portfolio model. Now, Kerry, we should say he's not the first guy. I've seen sort of an increasing drumbeat of this kind of proposal over the past couple of years, but it keeps getting sort of more and more high profile.
Yeah, Julie, you're absolutely right. I mean, this idea has been floated around for a while. But what's interesting is his letter that came out this week is very powerful in getting a message of what the big trends are out there. And what he's proposing is the idea that the investment portfolio goes from 60-40, which has sort of become the benchmark for 60% equities, 40% in bonds, to kind of teeter-totter, even out markets. When things are flying high, you've got your equities. When things aren't so great, you've got the bonds to kind of moderate things. So this creates a really moderate portfolio moving forward. What Larry Fink is saying, a 50 equity, 30 bond, 20% of the portfolio goes into alternative investments. And he's talking about infrastructure things, real estate, that sort of thing, private equity. And this idea is to sort of build out he said we absolutely need more diversification, because even though the other model has been successful, and it's now being tested by inflation, by volatility, by these rapidly changing policies, and people just don't know the uncertainty. And he thinks moving forward, we need more oomph on the diversification. Now, just quickly, I'll say there are drawbacks why this has not happened to date. Is these can be quite expensive for an individual to get into, minimums of maybe $50,000 to get into private equity. You have to have salary limits of minimums of say $200,000 a year and more, or $5 million in assets. They're not very liquid. They can have high fees with them. And so it's not as palatable for an individual investor to get into these kinds of things. So I think that we're going to see some movement if he's really pushing to this diversification rate. But we'll see what happens for whether individuals can find a way into this in order to build out moving forward.
Yeah, I suspect that this industry will get creative in the next couple of years and come out with some alternative asset products, perhaps, that might be a little bit more accessible. And that brings me to my next question, which is, would this work in a 401k kind of format for retirement savers?
Yeah, Julie, I love that question. And he does address that. He says, Fink is concerned that retirees simply aren't going to have enough with their Social Security checks in order to meet their cost of living moving forward in the future. And so his idea is, okay, let's do this. This is perfectly legal to have these private asset in a retirement plan. There's nothing holding people back, except he says that 401k providers just aren't familiar with the people who actually make these selections right now, don't quite understand how these work. And his suggestion is, okay, most people love target date funds, right? These are funds where you're setting the date you might retire. Maybe it's 2045, 2055. These have long-term ranges before someone's going to dip into them. He says, put that 20% in a target date fund, and that way people understand that it's for the long term. They're not trying to live on that money tomorrow. And carve out 20% in a target date fund that will go to these alternative investments, this proposed portfolio model that he is advocating.
Kerry, thanks so much. Good to see you.